Hey everyone, Mortgage Nerd here. I want to talk to you a little bit about what's been going on with mortgage rates, not the Fed rate. Remember, leading up to the Fed rate and even after the Fed rate, or the Fed announcing they were going to lower their rate by 0.5%, I kept talking about how mortgage rates may rise. I didn't expect them to rise this much because unexpected things have happened. If we look at our chart here, you can see this is where the Fed meeting was. It was right here, actually, this day, September 18th. This was Monday. This was our best day for mortgage rates in a very long time. And I did lock a bunch of people in this time frame here. The day before the Fed announcement, we started moving up in anticipation, and then the Fed rate dropped and mortgage rates started moving up. All of this was just because of the Fed rate increase. Nothing else really had come out that was really market moving or anything like that. But I thought here we would just kind of move sideways and come back down. That was my hope, at least, but that's not what's happened. So then we started getting really good jobs reports. This big one right here was unemployment dropping to 4.1. So let's do a little bit of a short-term history lesson here. Over here, the jobs numbers, the unemployment numbers, I should say, the BLS jobs report showed unemployment going from 4.1 to 4.3. That is what catapulted us downward here. Over here, the Fed said they were going to lower the Fed rate. That helped us. But then the unemployment numbers jumping the way they did got us here. And then we bounced up a little bit. So usually when you have these big moves, you bounce, you do some choppy sideways. So here we have a big move upward because now unemployment went from 4.3 to 4.2 in September, which didn't do much, but then 4.2 to 4.1. So we're back to where we were before the rates dropped. So it's kind of like the rates are now adjusting to the imbalance that we had before, and they're going back up. My hope is that this big move gets us to start turning. I had hoped that here. I had hoped that up here. It's not happening yet. We could very well see ourselves moving up into this range, maybe finally getting stopped up here at these highs back here. I hope not. I hope we turn around. The problem is all these job numbers keep coming in positive, meaning that more jobs are being found, unemployment's going down. That's great news for the economy. It's bad news for mortgage rates. Mortgage rates need the economy to hurt, because the more the economy hurts, the labor market hurts, the more we know the Fed is going to lower their rate. The more we know the Fed is going to lower their rate, the more mortgage rates will drop. Not at the same time, they have different timing, as you saw here. This week we had inflation numbers coming in, and they came in higher than expected, so inflation inched up again. That's actually normal this time of year. It happened last year. It was actually a little less than it was last year this same time. This is a temporary increase. What temporary means? 2 weeks, 2 months, 6 months, I don't know. This is why we say whenever you can take advantage of mortgage rates and refinancing into a lower rate, you should do it. And not say, oh, the grass is going to be greener in the future. No, there's a saying, a bird in the hand is better than two in the bush. If you have a good deal, take it. Instead of waiting, like a lot of people are like, I'm going to wait for after the election. This is what's happening to them now. They're not able to refinance to that lower rate. They're going to have to wait it out 2 weeks, 2 months, 6 months. We don't know. I think it'll be sooner than later. I think the election is going to tell us a lot. Watch my next video on what happens after an election to interest rates. It might surprise you. Mortgage Nerd out.